Hello and welcome back to How About That Crypto, your home for regular crypto and Web3 news and updates with your host, Bitcoin Stylist. So, today's news and updates is updating you on the crypto crash and all the bankruptcies that have happened. It's been a while, so I feel like there's been some news. Today is actually pretty big news. I don't know how big of news it is for you getting your money back, but Voyager digital assets have been purchased by FTX. Celsius customers file their own lawsuit to intervene in the bankruptcy case. We have leaked audio of Celsius planning to turn their debt into IOU coins, and then the CEO makes a big surprise announcement. And Three Arrows Capital is fighting claims that could send innocent people to jail. What the heck does all this mean? Not to worry, I'm going to explain it all. Just please like, subscribe, follow, comment. It helps support the channel. It doesn't cost you anything. Don't forget, this is not financial advice. Use the links below to do your own research. All right. I hope you had a great weekend. We are waiting to hear on the library case and the Ripple Labs case. Both are being sued for selling their crypto as unregistered securities. If you've been watching the channel or paying attention to the space, you'll know about the Ripple Labs case. Well, Library is another one similar to Ripple. The concern over Library coming out first and impacting the judge's decision in the Ripple Labs case is growing. So there's been some people saying Library doesn't really have the same means to defend themselves. So they're worried that there might be some unfavorable stuff coming out. Anyway, precedent could be made by either case. But more on this as we get news worth reporting. But this is a very big deal. Okay, let's jump right in. So we are talking about all those coins we lost when these crypto platforms went belly up and locked us out. In particular, Voyager, Celsius, and Three Arrows Capital. Well, Three Arrows Capital took money from Voyager and Celsius and made very risky trades with it. They lost so much money, they took down Voyager and Celsius with them. You're probably wondering, why am I not talking about Terra Luna? Well, Terra Luna was a crypto project that failed. It had a huge impact on Three Arrows Capital, Voyager, and Celsius, either directly or through contagion of the market. The big news there is that Do Kwon from Terraform Labs, creator of Terra Luna, supposedly has an international red notice out for him by Interpol, but when you look up his name in their database, it does not come up as a red notice. I'm not sure where that rumor started, or maybe we just don't know his full name and on which it is issued. Okay, so now on with the story. So I'm going to share my screen. If you're listening on podcast, please just follow along. You can use the links below if you would like to. All right. Okay, so our first article here. Author Yuki Yang and Olga Karif report on Bloomberg crypto exchange FTX wins bankrupt firm Voyager's assets. The FTX US bid has $111 million of additional consideration, and the crypto route contributed to Voyager's bankruptcy filing in July. So I'm going to read a few paragraphs here. FTX US, the digital asset exchange founded by billionaire Sam Bankman-Fried, won the auction for the assets of bankrupt crypto brokerage Voyager Digital. The agreement is valued at $1.4 billion, comprising an additional consideration worth about $111 million, and the $1.3 billion market value of all cryptocurrency at the bankrupt platform, according to a statement from Voyager Digital on Monday in New York. Customers will be able to transfer to the FTX US platform after the conclusion of the bankruptcy process, Voyager said, adding the purchase agreement will be presented for approval in court on October 19th. So you may remember when I was reporting about this, Sam Bankman-Fried from FTX and Alameda Research, they said that they'd buy Voyager's assets, and Voyager CEO came back and said it was a BS offer cloaked in a white knight offer or something like that. Basically trying to say trying to make himself look good. And now look at them. Anyway, I'm kind of excited about this because hopefully this speeds things up, the proceedings, and we can just kind of get on with it. We can get access to our money, even if it's 50%, I'll take it. I mean, I'd rather have more, but to be honest with you, I'll take 50% of what I might not ever get back, Anyway, what do you think about this? Let me know. Leave a comment below, and I am moving on. All right. Author Soma Biswas reports for the Wall Street Journal. Crypto investors got burned by Celsius. Then they battled back. Thousands who use lender Celsius network to bet on cryptocurrency are banding together on Telegram and Twitter to retrieve their assets in bankruptcy. It's a tall order. This article is very interesting. The author discusses how Celsius attracted a lot of customers who wanted to make money off their crypto, and now they've joined together to fight Celsius on social media. So check this out. I'm going to read a little bit here. Thousands of Celsius customers are gathering on social media apps such as Telegram and Reddit to parse legal filings together, pulling funds to pay for lawyers, and making YouTube summaries of developments at court hearings. Some are reading up on U.S. bankruptcy law, providing translations for non-English speakers, and trying to engineer their own white knight rescue deals. Now, some customers who had money in their custody accounts, that is accounts that were not generating yield, they're just sitting there. One would assume these accounts should be safe. It's not like they were saying, oh, hey, if you put your money up to earn a yield, well, that yield, there's some risk. There's no such thing as risk-free return, is there? Anyway, some would, never mind. This is accounts that were not generating yield. One would assume they'd be safe. If you were generating yield, your funds would be used to find that yield. So if you had a yield generating account, then there was risk involved. So it makes sense that the money is gone or worth significantly less than the original principal amount in those yield accounts. However, one investor named David Little, a 35-year-old petroleum engineer in Houston, wrote a letter to the judge arguing that custody customers should be able to pull their money. Seems pretty legitimate. This sparked a gathering of over 1,300 people banding together on Telegram. Check this out. I'm going to read some pieces from this article. I'm going to kind of jump around a little bit. Some members of this group decided to hire Togut Siegel & Siegel LLP, a law firm with a prominent bankruptcy practice, to argue in court that their coins should be returned first. The 70 people who contributed the legal funds collectively have $26 million in their account. A Togut lawyer disclosed at a court hearing the law firm was willing to make an initial lump sum payment of $100,000 to get started. So take a lump sum. So basically 70 people got together with accounts collectively worth $26 million and paid $100,000 to get the process started with these lawyers. It's a lot of money just to get started, huh? The custody account holders argued the money was theirs because Celsius was simply storing it for them. Celsius asked the bankruptcy judge overseeing its case to approve the return of some, but not all, of the money in those accounts. I'm sorry, but the only reason why you can't give me my, excuse my language, the only reason you can't give me my money back from a custody account is because you were running a Ponzi scheme. Sorry, but that's literally the only way you don't have my coins. Because if they're in a custody account, they should be being custodied. That's it. The judge has raised concerns about returning the assets right away and will hold a hearing on October 7th. So the author goes on to explain a bunch of different stories about people involved in the movement. It's a pretty good article. I recommend you read it. It's if you're interested in hearing more of these stories of people banding together. But at the end of the day, it says right here in the third paragraph, they face an uphill battle in chapter level. They face an uphill battle in Chapter 11 bankruptcy negotiations where small customers are vulnerable to losses and rarely have a seat at the table, typically dominated by lawyers and advisors. The company has at least 2 more months to formulate a reorganization plan that will determine what happens to customer accounts and how assets will be distributed. So there you go. What do you think about that? Do you think that that's a fair move? Do you think that that's exactly what they should be doing? Or do you think that everybody should be treated equally or something else? Let me know. Leave a comment below, and I am moving on. Now, the next story is also about Celsius. Author Cheyenne Ligon reports for CoinDesk, Celsius Network might be planning to turn its debt into crypto IOU tokens. In a leaked audio file, Nuke Goldstein, the firm's co-founder and chief technology officer, detailed a potential plan to issue wrapped tokens and representing the debt to customers. So I'm going to just play this little video here for you.
File, Celsius might debt According to a leaked audio file, Celsius might be planning to turn its debt into IOU tokens. So the leaked file, you can hear Celsius's CTO and co-founder Nuke Goldstein detailing the plan. As we can all remember, Celsius filed for Chapter 11. Yeah.
This is the greatest name in crypto history.
I know.
Nuke Goldstein. Nuke Goldstein is the man behind
I did a double take.
a failed Ponzi scheme, alleged Ponzi scheme. We don't know yet.
What?
But okay,
I mean,
continue.
Nuke Goldstein sounds like the best supervillain name ever. I know everyone on Twitter had a really good time with the name when the story broke yesterday.
Let's go.
So as everyone can remember, Celsius filed for Chapter 11 bankruptcy protection in July, and this was 1 month after halting withdrawals due to liquidity issues. So Will, I'm going to pop this one up to you. Besides Nuke's name, what do you make of this solution?
Honestly, we could just do the whole show about Nuke Goldstein's name because it's just that fantastic. But we shouldn't. There's more pressing topics to cover within this story. The most interesting thing about it to me is the IOU solution, right? Because like this token has been done before, like this token idea. Bitfinex is probably like the largest name out there for doing this. They issued the Leo token after a hack in 2016 where they saw a bunch of Bitcoin, billions of dollars worth of Bitcoin were stolen from them. And they issued this token in order to shore up their books. And that actually worked out very successfully. It took a few years, but they got their Bitcoin back, and that was actually happened this year with a very interesting story about a TikToker who broke into the back end of Bitfinex and sold a bunch of Bitcoin, but that's for another day. The point is they use the IU token, were able to shore up their company and continue to work and survive. But on the other hand, there's other stories where this does not happen, right? Where people issue a token, does not really work for their company, and then people are still holding the bag, now just with this basically worthless promise that only unravels more over time. There's some interesting points to this token they're coming up with. Nuke had some great comments on it. We don't know if this is actually going to happen as well. This is according to leaked video stuff from a customer of Celsius.
Okay. So basically, Celsius is in the toilet with over $1 billion hole in their balance sheet. And here's how they see it working out. Customers could redeem their wrapped IOU tokens through a timeline of the redemptions remains unclear. Trade them on the open market or hold them to speculate on Celsius' potential recovery in the long term. In another leaked call shared by Fong, Celsius executives told employees at an all-hand meeting on September 8th that Celsius CEO Alex Mashinsky had already shared the plan to issue IOU tokens with the Unsecured Creditors Committee, which reacted with positive feedback. This is really how we resolve this, how we go out or how we get out. What we do in this pivotal moment can be through unprecedented, really innovative solutions, and this plan is one of them. Except for in the clip you just listened to, this actually has been done before multiple times. Some have worked out and some have not. So let's see about this. I mean, I can't even imagine the courts would go for this, but maybe they would allow you to buy your own debt back from you. I mean, or maybe they'll just issue it and saying, oh, this is worth this much, but it's not actually worth that much. I don't understand. Anyway, it's worked in the past. Let me know what you think. If you're a Celsius customer and you have money on their platform, let me know what you think. But wait, there's more when it comes to Celsius. So let's check this out. All right. There's 3 authors here. Ashley Caput, Kate Rooney, and Paige Tortorelli. Celsius for CNBC. Celsius CEO resigns in the middle of bankrupt proceedings. Oh my gosh, this guy's Celsius person. He's like gotta be like one of the top douchebags right now. He's like going around wearing shirts that say banks are your friends, and then he does something that banks used to do. Like, I mean, maybe some would argue they still do them, but like the stuff that he pulled was just like straight out of pre-2008, pre-Dodd-Frank stuff. Anyway, debate me on that. You leave a comment below. I'm just going to read here the first 3 paragraphs. Celsius Network CEO Alex Mashinsky submitted a letter of resignation Tuesday, months after the crypto company filed bankruptcy proceedings. Mashinsky's resignation is effective immediately, but he said in a release that he will continue to help the company provide creditors with the best outcome. And he says, I regret that my continued role as CEO has become an increasing distraction, and I'm very sorry about the difficult financial circumstances members of our community are facing. Since the pause, I have worked tirelessly to help the company and its advisors put forward a viable plan for the company to return coins to creditors in the fairest and most efficient way. Well, there you go. So he's cutting and running. He's like, I'm done with this. What do you think? Would you have done the same? How should we handle this? Are there any Celsius customers out there? Please leave a comment below. I'd love to hear what you think. But this is Celsius. It's a mess, period. Good news is Voyager was purchased by FTX. I think it's good news. Do you not think it's good news? Well, let's move on to our last update of the crypto crash for the day. And we really don't have much yet on Three Arrows Capital. I'm not sure how many people care about Three Arrows Capital because it's Voyager and Celsius that lost our money. They owe us the money, not Three Arrows Capital. But anyway, let's check this out. Steve Carew reports for CoinGeek. Three Arrows founder calls liquidators inaccurate as court approves probe into Singaporean entities. So I'm just going to read a couple paragraphs here. Let's see. Okay. So just after the Singaporean court gave the liquidators access to local entities and financial records, 3AC founder Su Zhu went to a court in Bangkok, Thailand, to deliver an affidavit, the first time he had been seen in person for months. The affidavit was aimed at the liquidators he believes are misrepresenting the facts and misleading the courts. Teneo has accused 3AC founders of failing to cooperate, claiming they have provided rather selective and piecemeal disclosures about the hedge fund's assets. So who's Teneo? Let's go up here. Doesn't really say, actually. It just says Teneo, the British Islands court appointed liquidator. Okay, so it's a point of corner liquidator. They're saying basically, look, 3AC is not being cooperative. We need to go after them more. And it says Zhu's affidavit, which is seen by Bloomberg, denies allegations and accused Teneo of failing to provide an entirely complete or accurate version of events. The liquidators have furnished the Singaporean High Court with inaccurate and misleading representations of the operations, relationships, and timelines associated with their entities. This is interesting. So it's like Three Arrows Capital, British Virgin Islands, U.S., I mean, not really the U.S., but Bloomberg saw the affidavit, and Thailand. It's so interesting, like all these different groups together. So the guy's worried that employees could face imprisonment and hefty fines if they're found in contempt of the court. So he's basically been like, look, get off of these Singaporean company, like that's not where everything is. We moved it to the British Virgin Islands. Stop going after these people. So anyway, that's the update. It's not very sexy update on anything except Voyager, but I think the Celsius stuff is interesting. And yeah, so I'll keep you posted. I had money on Voyager, so I am gonna definitely keep you posted on that. And Celsius and 3AC, if there's something else you'd like to know more about, let me know. Leave a comment below, and I'll talk to you all tomorrow. Huddle on.